Is TV18 and you're watching CNBC TV18.
Hello and welcome to this special coverage of the macroeconomic data that's coming in from the National Statistical Organization. The best news is flashing on the screen. The CPI for the month of June has fallen to 6.26% from an unexpectedly high 6.30% for the month of May. This is far better than most economists' expectations. The average number we got was 6.51, but on the street there were estimates of 6.8 and 6.9 as well. So coming in at 6.26, this will be a huge relief for the bond markets, for the Reserve Bank and for the economy in general. Let me just read you through the numbers. We can wait for the industrial output numbers. That anyway is not as significant for policy making as the consumer price index. The consumer price food inflation index has come in at 5.4% compared to 5.01%, but that is to be expected for the month of June. Prices normally rise because of rainfall and other reasons. But let me take you through the inflation numbers. Cereal inflation has fallen year on year by 1.94%. So about a 2% fall in cereals is in a big way responsible for the fall in the CPI number. Among others, meat and fish is up 4.8, eggs up 19.4. That's been very high for some time now. Milk products up 1.9%. Oils and fats have been quite clearly the big drag for inflation, up 34.78%. They're largely imported, and imported edible oils are expensive. Fruit, 11.8% higher. Vegetables, that one has clearly saved the day. It was very high in the month of May, but it's fallen minus 0.7 year on year for the month of June. Well, those are the main pulses, up 10%, but they have been higher for some time now. Let's come to clothing and footwear, up 6.2%. That again had risen last time. Fuel and light is higher by 12.7%, but some of it is because of the fuel prices, diesel and petrol prices. Let me come to the services, which is what you call core inflation. Household goods and services is up 5.81%. That is still high. Health is still very high at 7.71%. Transport and communication is again high at 11.56%. Recreation and amusement 4.99%. Education 3.45%, mellowed somewhat. Personal care and effects at 4.82%. So the overall services inflation is coming in at 7.28%. So my sense is core inflation will also be high. Let me see if we're getting the core inflation number from the exchanges, from the agencies. No, not quite yet. So let me now come to the IIP number. The May industrial growth has come in at 29.3% compared to minus 33% year ago. So basically it's flat. It's not a great deal in terms of it's flat from May of 2019. It fell last year because of complete lockdown, and relative to that it has risen a bit. So the main industrial output, remember June is the inflation number is June, but industrial output number is May, and that's come in at plus 29%. Our poll had thrown up an expectation of 33%. So it's a little less than what our poll has expected. But, here the guesses can be very wild, considering that the year ago number was so much in the red. Let me get my panel of experts in. Anubhuti Sahai, the chief economist from Standard Chartered India, Jayesh Mehta of Bank of America, Sameer Narang, the economist from Bank of Baroda, and Mr. D.K. Joshi, the economist from CRISIL, have joined me. Gentlemen and Anubhuti, thank you very much indeed for joining us. Let me start with the lady. Anubhuti, what do you make of this number, 6.26, about the best news, I guess, for the economy?
Absolutely, Lata. And I think what's more encouraging is that based on our estimate, this decline in inflation, especially if we compare it to May and versus what Street was expecting for the month of June, this has been driven both by a slower pace of increase in food inflation as well as in core inflation. So core inflation in our view is estimated to be at around 6.16%, lower than 6.55, which was for the month of May. So it's possible that either the pace of month-on-month increase in June vis-a-vis May has slowed down, or it's possible that we might have seen some reversals in select subcomponents. For instance, some of the numbers which you were reading, especially for say recreation, etc., these numbers are much lower than what we were penciling in. So clearly a very pleasant surprise, especially after the May shocker, and gives a lot of relief to the markets as well as breathing space to Monetary Policy Committee as well as RBI.
Okay. Well, I might tell you that when I quickly went through the numbers, the one that even month on month has fallen is actually fruit. It's a fall in the index from 167 to 164.6. So it looks like a 1% fall in fruit prices for sure. Among other things that has fallen, footwear has fallen from 152.1 to 151.9. So it's minor, but still it is a month-on-month absolute fall in the prices of footwear. As you pointed out, clothing, I think, is about flat, 161.8 to 162.3. So year on year, it's a big fall, but month on month, it's not risen much. I guess that's a positive. When it comes to services, the fall is in recreation and amusement. It's fallen from 155.8 to 155.7. And then perhaps all the others, personal care, education, most of them are flat. They have not changed much month on month. Personal care and effects, which is a fairly weighty item, is 158.6 has become 158.9. So it's remained more or less flat. Transport and communication, of course, has risen from 158.9 to 150.6. So this petrol and diesel is going to be a big overhang on the CPI. But otherwise, we have not seen too much of a month-on-month jump. Even in the household goods and services, another weighty item, the index is practically unchanged between May and June. Well, let me get the other experts in as well. Mr. Joshi, what do you make of this number, 6.26? What was yours? And is this a very big positive?
Well, I think this is still above the RBI's comfort zone, by the way. So yeah. I think, and we were